Well, let's get more now on today's ECB decision to cut interest rates 25 basis points and also get ready, of course, tomorrow for the big summit in Europe with those policymakers, those leaders, where we're joined by Bank of America's chief economist, Betty Liu. Mickey, it's great to have you back in the studio.
Good to be here.
What did you think of this 25 basis point cut? Should they have done more?
Eventually, they're going to do more. I think the next move will be built into market expectations pretty soon. Rates are going to have to go lower. The ECB, everybody knows, is going to have to provide what we should call bridge loans. That is, provide more liquidity to allow the fiscal authorities to get their acts together.
So why do you think they're holding back now? I mean, it sounds like inevitably they're going to have to do all of this, right?
Yes, and I think that's a good question, and they just presumably thought they'd move judiciously, but they could have moved more aggressively here because, once again, everybody knows that the ECB is going to have to provide liquidity in the short run in order to allow the type of reforms, both fiscally and economically, in the various countries.
Well, it could be possibly that the ECB wants to see what comes out tomorrow, right? Or what's going to come out of this meeting that starts tomorrow with the European leaders. What do you think, Mickey, needs to come out of that meeting?
Well, I would like to see a very rigorous blueprint for how the troubled nations are going to address their fiscal problems, and certain nations need blueprints for how they're going to address certain economic rigidities that are holding back their economies. And here, there's this issue of sovereignty. How much power should the nations have? But eventually, we all know there's going to require fiscal federalism, where there's going to be a lot of redistribution. But I think a critical point here is beyond the fiscal problems facing some of these troubled sovereigns. Some of their economic policies need to be adjusted significantly to enhance economic activity.
He was listening carefully at those results. 75% think Bernanke is doing a better job than the ECB. You buy it?
Well, I think everybody always looks to the central bank to do something to lift things. I see what the Fed's doing, like through Operation Twist, not addressing the critical issues of the economy, and maybe the Fed is going beyond what it's capable of doing now. But when I think about a popularity poll on Bernanke, I mean, when you look at the other array of policymakers in Washington, there's not much competition. So of course he's going to look good.
They always say, Mickey, this is why Bernanke is getting high marks these days, right? I mean, the jobs market is going in the right direction.
Exactly. I mean, if you consider when you conducted your last survey in September, all the Wall Street economists had very high probabilities of recession. Since then, you've seen a pickup in retail sales. Businesses are responding to the pickup in demand. They've slowed down their layoffs. They've picked up their hiring. So things look and feel a little better. That's reflected in the surveys. Nothing the policymakers have done.
Well, is there anything that could accelerate this at this point? The jobs market I'm talking about, the recovery.
Well, I think the critical issue, I think the holiday retail season's fine. Will the product demand and consumer spending continue to have momentum into 2012? That's a critical issue. Another is confidence that European policymakers are going to address their issues, their problems. That would lift a lot of uncertainty.
Right. It would restore confidence is what you mean. Okay.
And that could provide that needed momentum, because clearly the uncertainty coming out of Europe is affecting household and business decision making in the U.S.
Psychologically. Mario Draghi is going to be speaking at any moment. And what do you think that he is going, what do the markets want to hear out of him at this press conference, you think?
The markets would like to hear that the ECB is prepared to provide more liquidity, that is, buy bonds contingent on realistic fiscal actions that coming out from the troubled European nations.
Okay, but do you think they'll get it?
not exactly. I mean, he'll allude to it in his press conference, but not say anything concrete. And he'll wait until what comes out of the summit. And then my expectation is the summit is not going to come out with any kind of detailed blueprint. It'll need to be filled out with details. So the uncertainty will continue, but I have this strong hunch that European policymakers, they're going to do everything needed to keep the euro together, to keep the union together. And then after that's eventually resolved, they'll have to face the economic consequences of all of the bailout packages and the like, and that's going to last for years, a slowing economic growth.
What is your reaction to this?
The ECB clearly recognizes some of the stresses in the European banks, both on the quality of their assets and the banks losing some of their deposit base, and so the ECB fills the crack. They're trying to prevent a credit crunch that would have a negative impact on the economy. Good move.
Okay, a good move. All right, Mickey, great to have you here. Thank you so much.